All right. Good morning, ladies and gentlemen. We're just about to get started. So let's keep on reminding the team members to join through so that they don't miss out any part. Let's keep sharing the link. Let's keep inviting. Let them be part and parcel of this morning training, the question and answer. So that they don't miss out on anything and then probably have their questions answered, especially in areas that they might have not got right in the course of the week. So let's keep inviting so that they're part of this meeting. We're about to start in the next 3 to 4 minutes. We shall get started. Yeah.
Yes, Coach Musa.
All right. I think we are good now. I wasn't host yet, so I was calling for that. So I think we're good to start, right? Yeah, I think you're good to start. You're good to start. Yes, good morning, ladies and gentlemen. Good afternoon for those already in locations where they're already in the afternoon time. And then if at all there are groups of people on the call who are actually within their evenings, good evening as well. This is Coach Musa from Uganda, and I'm one of the members of Team Eagles International, the umbrella body through which I created my team, the Galaxy Crypto Academy. And I'm always very humbled and pleased to always host you every Fridays on our Q&A session. Yeah, I know a number of us in the team, in our respective groups and respective team, we have our different schedules in which we have or we conduct our trainings, and with different arrangement of programs within the course of the day running. But as Team Eagles International, we have designed a program, a daily program that runs from Monday to Saturday, where all who are involved in into the crypto trading business, more especially those who trade using the Royalq bot, are always given the privilege to be part and attend and ask their questions and get to understand fully what the crypto business is all about, get to understand some news here and there regarding the world of cryptocurrency. And then they also get to understand and have free lessons with regards to cryptocurrency trading, and in-depth study and training in cryptocurrency trading. Now, before we can get started, allow me to recognize the presence of amazing leaders on the call. I see leader OBM on the call. I see leader Buibo on the call, and our great leader Julius Kabanda. And I see amazing leaders. I see leader Charles Bukenya, and all the other leaders that I have not mentioned their names, all protocol observed. It's a Friday, and the weekend is kicking in, and I believe Fridays like this we need to crown up our week with a session like this where we get to interact, we share ideas, because that is what makes us a great team. We always give chance and opportunity for all the team members, all those who feel sense of belonging, okay, to the Royalq, to the Team Eagles International, to share their thoughts, to share their ideas regarding the crypto business, regarding the Royalq board. Yeah, and we see how we can maximize from this opportunity. This is one of the only opportunities so far that has actually stand the test of time. Yeah, most of the times when the business started, most people thought it was going to be a 6-month business, going to be a 1-year business, and it will collapse just like the previous businesses. They were trying actually to compare it with the returns on the investment businesses they did before. And the kind of mindset they came with was a different mindset, not a trading mindset, but rather a return on investment mindset, where probably I would just conclude that they used to do nothing much apart from sharing the opportunity, and the other nitty-gritties of how the business operates basically belonged to the owners of the business. The secrets, they understood it better. But with Royalq so far, we have witnessed, we have experienced, and we have seen that, at least for the times that we have been in this business. Me, I'm already 1 year, and I think I'm making 1 month as well. So yeah, this is the only business which I've really shared with a lot of peace of mind, without any fear of anything happening tomorrow. So it's a good business, a great business. That's why I'm always very proud to share, and even, to share my knowledge more and more in regard to this business. And also this opportunity has really opened my eyes to understanding cryptocurrency better. Previously, when we used to hear about cryptocurrency, just based on the people, just out of the experience that most people had previously of being scammed by the opportunists who understood the crypto business, but then were not actually open to sharing freely with people so that people may also understand. So whenever we would hear about cryptocurrency, we would think it's a scam. Why? Because we are really not open enough. We didn't give ourselves time and chance to understand and learn deeply what this crypto business is all about. But honestly, through Royalq, I'm grateful that we changed the narrative. And I believe that is the case with most leaders and most people on the call tonight, this morning. So yeah, it's a good opportunity. At least I'm grateful that I am part of this business. So as always, we have designed programs that runs from Monday to from Monday to Saturday. Yeah, it runs from Monday to Saturday. And previously, we used to have a program, which, of course, in just a few weeks ago, we had to improve on the program. So Mondays always is where we have the Royalq bot fundamentals. Now, of course, you know that most of the times when an opportunity is introduced to you, you need to have a general, or what we call the fundamental ideas and knowledge about it, right? How it operates, the basic settings of the parameters of the robot, how you can get started with the robot. So generally, they give you the fundamentals, the things, the simple things you need to understand before you dive deeper into the Royalq opportunity. At least that can get you started and moving on, right, as you enjoy trading with the robot. Then on Tuesdays is where we have an in-depth study of the compensation plan. Now, this is where you get to have a broader understanding of the Royalq opportunity. Yeah, because just by being just being a robot, it doesn't rely only as a tool or as a trading tool that you can simply use to automate your trading. Yeah, so there are things that lies above and beyond the opportunity in which the members or the people using this bot can benefit from, right? So that is the compensation plan, the reward, right? We get to look at the reward, because besides just activating and trading, you can decide to share the opportunity. You can decide to share the amazing results that the robot is giving you with a friend, with a relative, or simply you may just decide to post your results on your status or the different social media platform, and then somebody would show interest in understanding and knowing what you're doing as a business. And then when you get to introduce an opportunity to such a person, some people just get amazed when opportunities are shared to them or are shared with them. So they can't hesitate and take action. So when they decide to take action, you don't walk out free. Why? Because simply that person would have understood or would have got to know about the opportunity because of you. Yeah, and through you. So when you share your link for the robot, for that person to activate and join you in the trading business using the robot, you are rewarded. Yeah, you deserve to be rewarded. Yeah, so you get rewarded based on the different ranks. Now, so these are programs that are discussed in details on Tuesday. So if you're a new person, I think you want to be part of the Tuesday Zoom, because there's an action-packed day in which it is an action-packed day where you really get to learn a lot, yeah, from the leaders taking you through the program or the training during Tuesday. Then on Wednesday, having understood the basic fundamentals of your robot, and understood the rewards, the benefit, the different benefits you get if you decide to share the Royalq opportunity, we tend to dive a little now into the tradings. Mind you, just a recap for the people who are new, or it is probably your first time to be part of the Zoom training, or you just activated your robot newly and you want to understand more. When you decide to take action and use the Royalq robot as a trading tool, you have the liberty to choose the kind of strategy you want to use for trading. Nothing like restriction. You are free. You can decide to trade on cycle. You can decide to be a passive trader. In other words, in a simple term, a passive trader. And as a passive trader, you are such a person, probably very new into the crypto business, very new into anything related to cryptocurrency, or actually even very new in using robots when it comes to trading. Now, you're this person who is interested and wants to take action, but really does not understand that much. Now, you can be that category where you activate your robot and set your robot rolling on autopilot, running 24/7, hands-free, right? Just avail your capital in your exchanger, the trading capital, connect your robot, start your robot. Pick any coin, start your robot. Now, depending on the amount of capital you have, even when you're trading passively, you can decide to use the default settings of the robot. You know, the robot comes with the default settings. The parameters are set in the default format. Now, you can decide to use the very setting. It's actually one of the amazing settings if you have the capital, right? Instead of making adjustment, you can use that setting. So you can decide to use the available settings, the default settings of the robot, and it is just a click away. Just start it up without making any adjustment, and then the robot will begin trading for you 24/7 and giving you the profits. Or you can decide to adjust the parameters, the settings, to suit your trading capital. And of course, that is always done under the guidance of training. You are taken through that, right? How you can make those adjustments. Yeah. And you learn the do's and the don'ts when you're making those adjustments. Yeah. So you can decide to be the person, adjust the parameters to suit your trading capital, or just go for the default setting and then allow the robot trade for you. Allow it to trade for you on autopilot 24/7 as you continue with your other daily routines. The robot will be generating for you some money on a daily basis in seconds and minutes. Now, that is a passive trader. It is good for someone who is very green about crypto, or somebody just getting started, or some all the time, someone who may not really have the time to be, viewing and, seeing and making adjustments on the settings for purposes of maximizing. So you can go for that. Maybe your work schedule is very tight. You go for passive trading. Then if you can as well decide to go in solo trading. You can decide to go into what we call solo trading. Now with the solo trading, this is where you're this person who says, okay, for me, I may have some time for my robot. Why? For purposes of maximizing profits using the robot. Now, in such cases, what do you do? If you decide to go solo, you are probably telling yourself that I now want to go pro. You want to go into professional trading. Now you want to understand the market pretty well. You just don't want to depend on, you don't want to be locked inside the box and you don't know what happens outside, right? You want now to understand what is the crypto market like? What are the behavior of these coins in the market, right? So this is where now you want to get a full understanding of the market so that you are able to take decisive, the right decision on when to trade and when not to be in the market, or which coin to trade and which coin not to go for, because you will have all the information, both the fundamental and the technical analysis in regard to the market of a given coin you want to trade. So this is where you get to understand the part pretty well. right? And that is where you see the trading view comes in, because you cannot do technical analysis. You cannot understand fully the market structure, the behavior of the market, how to analyze a coin when you don't have a trading view. Trading view is a tool that all those who trade in stocks, all those who trade in forex, indices, talk about option, cryptocurrency, all of them uses the trading view, because within the trading view we have those, those analytical tools. We have those candles, we have those indicators, we have those trend lines, which can help us in understanding the market, looking at previous record, looking at the current behavior of the market to predict the future performance of the coin. Even those in the financial market, talk about the banks. These are the things they use, yeah, and to make money, using our money for the people who like saving in the banks. Yeah, so on Wednesday, it's one of the amazing day also, in which you don't want to be, you don't want to miss out on, right? So that is an in-depth study you go to learn. You get to learn a lot about on Wednesday. Then Thursdays is where we give a little tip. Yeah, the leader, we get to have leaders trying to share with you, the new people, on the strategies of prospecting. I would just call it prospecting. Yeah, prospecting is, prospecting sometimes can be intentional or unintentional. Unintentional, when you realize that you have an opportunity that really pays and rewards, definitely you won't sit out. You won't sit down and just look. You would want to maximize fully from such opportunity, from such an opportunity. So what happens then? You can do your prospecting intentionally or unintentional. The intentional way is, of course, approaching a friend, a family member, or even a stranger by just purposely beginning to befriend. And then slowly you dive in as you get acquainted with each other. The unintentional, you can just decide to be sharing out of excitement, put in your status, enjoying, but then somebody will be following, and finally the person will have to inbox you. Wait, what is this that you're doing? Probably some question will arise, right? So that is the unintentional. So you do it, but of course with a hidden intention. So this is a day where you just get to learn the tips of marketing, because after having understood that there's a great reward when you share the Royalq opportunity, you want to learn some tips, on how to market, on how to prospect, how to add the people you prospect, you add them on your list of people you want to share the opportunity with, and then finally make a follow-up and then get them started and they become part of your team. So you don't want to miss out on such tips. Yeah, it's very key. The world currently is actually, marketing is one of the industries that if you're part, you will never go hungry. Yeah, you will really not go hungry, because it's one of the industry that pays, and pays massively, right? If you understand and know what to do rightly. Yeah, so Thursdays, that's when we get to share those tips. Then Fridays like this, which is today, is when now we get to share now ideas openly. Everyone is at liberty to share. Everyone is at liberty to ask questions. And we just, we get to understand a few things that probably we may not have understood in the course of the week, right? This is a day where now we get to come on a round table and share, and then try to forge a way forward on, how we can maximize together and win as a team, right? Yeah, so briefly, that is a background. That's the background of this, today's session. And tomorrow, for all those who have joined the opportunity newly, the new people who have just activated or probably just getting started into the trading, tomorrow is when you get to understand your robot well. You will have the orientation. All the new Royalq users, you get to be oriented. You get to be, you get to learn. You get to understand the features that are on the robot and what their functions are, right? So that if you now begin manipulating and tapping on the different features, you know what you'll be doing. not just doing it blindly. So you get to understand the features and their function very well on Saturdays. Now, you don't want to miss that. You don't want to make any team member who have just joined newly to miss out on such a session. Yeah, it is normally done with the leader there from German, Leader Doris Angel. All right. With all that background said, I think, yes, we have amazing leaders here. I'm the host. I'm going to be moderating, but at the same time answering to some questions. But then we also have on call leaders who will as well be helping out, right? Now, the criteria is always, you can ask your question on the chat, or you can probably raise up your hand, and then, yes, we get to give you a chance to ask your question, right? Or give you a supplement, right? In case there is any. Now, for those who will be, sharing the questions on the chat, we have leaders that will be answering as well to those questions. But what I want to remind all of us is that I do really encourage, because we have team members, honestly, who tend to ask a lot of questions, who tend to want to understand everything actually in a single day, right? And they repeatedly ask you questions, or sometimes some are very slow learners. So they want to always ask questions to understand. So I do encourage you to invite such people on a call like this to have their question really answered. Because I believe as their question is being answered, the things that they will be, we may touch on, right? Which may also help you probably understand a particular part that you were not conversant with, that was actually giving you a hard time. So it is always very important to attend Zoom, Zoom trainings, yeah? Be part, you may be busy, but just have it on. Something, you may get some information, right? At least you'll pick out something, that will be helpful. All right. Okay, so I think we are good to go. All right. So we all right, this question here, this is Baingana Tadeo Biarugaba, is saying that, hello members, I'm trading Matic on the since 26th, and that was a Wednesday, and it is moving between the 5th call and the 7th call, while buying and selling, yet it is on one shot. It buys, calls 5, 6, 7, then it sells them. Then it buys again, then sells them. Yet it's on one shot. I'm confused. Is it psycho trading? Or question mark? Wow, this is good. So Tadeo, now there's one thing you need to understand. You see, sometimes why you put a coin on one shot is because you're looking at the end result, right? You're looking at the end result. You want the robot to sell the entire position and never to buy again. I don't know whether you understand this. You see, the one-shot strategy allows for the clearance of all the quantity, all the position quantity that they bought or that the robot had bought, right? And if you put your coin on one shot, when your strategy mode is on the sub-bin mode, say real-time settlement, remember, you are in, you have set your strategy in a scenario, in a situation where you are allowing the robot to buy, but you're not limiting it from buying. I mean, you allow the robot to sell, but you're not limiting it from buying when the price drops again. Because the most important thing is, which to me, I am seeing very pleasing. You're saying rightly that it is buying and selling. That is the most amazing thing. Now, that is what should be the point of focus. Are you buying and selling, right? But the one shot will apply when finally the robot clears everything, all the quantity of Matic coin that it bought. that is when it will not buy again. But for as long as it is within the sub-bin mode real-time settlement, and then the number of calls made is from 5 and above, it is going to help you buy and sell always, right? It will continue buying and selling, buying and selling. Now, should the market of Matic gain momentum to a point where, the movement is able to clear everything, let's assume it had made the 5th call, all right? It sells the 5th call, and I mean the 5th sub position, and then it comes and combines the 4th, 3rd, 2nd, and 1st call plus the initial entry amount and position. It clears them all at the take profit percentage that you set. That is when the robot will not buy again, right? It won't buy again. But for as long as it is in the sub-bin, the strategy mode is in the sub-bin mode, real-time settlement, right? The movement about the sub-bin mode region or the sub positions from the 5th onwards will allow for buying and selling, even when it is on one shot. But when finally an opportunity comes where the robot is able to clear everything, that is when, after selling, it won't buy again. Is that cool, Tadeo? Yes, I think that is all right. I think that bit is understood properly, pretty well. Okay, yeah. So now Nostario tumuhimbize, is it? Yeah, Nostario. You are saying can margin call from 5th call sell while still in red? Absolutely, absolutely. It sells while still in red. Now, what do I do? Yeah, okay. Let's do this. Now, what you need to realize is this in regard to okay, yes, Leader Julius, let me just, you can unmute yourself and answer. Probably you may want to answer. Then I will supplement. Yes, Leader, you can go ahead.
All right, thank you so much, Coach Musa.
Yes.
So what you are trying to explain that maybe I needed to clarify a little bit about why is it that your coin is in one shot, but when it buys call number 5 and 6, it still sells it, yet it is still in one shot. You need to understand that when the robot buys call number 5, it is an independent amount of money that has been invested in. Now, you need to understand that call number 1, number 2, number 3, and number 4, these ones, they have the same take profit. And once they are bought, they're in a martingale strategy. They will be sold once, and the robot will not buy again. But when it buys sub-binary, or it buys bin number 5, it is independent. It will sell it, and if the market has not risen on the average of the first 4 calls it bought, it will still buy it again, and if the market rises, sell it again. But if the market rises above the average of the first 4 it had bought, then it will sell all the 4 and it will not buy again. That's why this person was asked that, can margin calls 5 can sell while still in red? Yes, because once it buys margin call number 5, it creates its own average price. It creates the average price for margin call 5. It creates the average price of margin call 6. So once the market rises above its average price, not the total average price, no, above its average price, it will sell it. Thank you so much.
Thank you very much, Leader Julius. I think, yes, that was okay. That was a good Thanks for the supplement. Let me try to do this. Let me share this and try to explain this further. Let me do this. Okay. Now let's take an instance of this. Let's take a simple example on this. So we have this, right? Are we all seeing this? Now, normally, from the first call, second call, third call, and fourth call, the entire position bought within these first 4 calls is treated as a single. It is treated as a single entity. When the robot is going to sell, all the position bought from the first to the fourth, including the initial the initial entry, is treated as a single. It's just like something you bought and you were stocking. And when it is being sold, it is going to be sold together. It will be treated together as an entire unit, right? Like, for example, if here, let's say it was $20 used, then this is 40, this is 80, and this is 160. It is going to add up all the position amount used for these first 4 margin calls, right? After adding them together, it is going to sell them at the take profit percentage you set, right? It is going to sell them at the take profit percentage that you set. However, whenever the robot, whenever it exceeds the 4th call, and then you begin going to the 5th call, 6th call, 7th call, and plus onwards, what happens here? Whatever amount that is invested on the coin at this sub position is treated as an independent unit, right? Let's say, for example, the robot was using $10 as the first buying amount. So it is going to come, multiply the 10 by 32, meaning in total, at this sub position, the 5th call, the robot is going to use $320. Now, when the robot is selling, it is going to sell this 5th position, right? The $320 at the percentage that you will set for this call here alone. Now, remember, from the 5th call onwards, you can decide to adjust the take profit percentage independently, or you can maintain them as a single unit. You can maintain the same amount, the same take profit percentage. Now, this one here, the take profit percentage from this point onwards may be independent of the world position take profit percentage you set. So this one will be treated like, assume in the 5th call, you said that you wanted to take 2%. Now it is going to take 2% of $320. So it will sell. The profit realized will be the profit for this position. Now, if at this point also, let's assume we maintain the first buying amount to be 10. Let's just for example purposes. You shall realize that from the 6th call, the robot is going to invest 640. Now, still, because now this is the market dropped by 10%, the robot bought, but by buying, it used $640. Now, should the market reverse, should the direction of the market change from this point, and then the market, the market moves by, say, 2% again, if that is the take profit percentage you want to take from this sub position, it will now close your trade in a profit of 2% of this amount here, the 640. It will be independent of the 5th call. So once it closes this, it will now go to the next and check how much is used on the 5th call. What is your take profit percentage? Is it still 2? Okay. If the market moves from this point again by another 2%, it is going to close 2% of 320. Now, once it sells this position, however much the market moves by what percentage, what it is going to do here is it is going to combine the entire position from the 1st to the 4th, including the initial buy, and then sell it at the whole position take profit percentage. I don't know whether it makes sense. I don't know whether it is understood. Yeah. I don't know whether it is clear. But what happens is from this, all the position bought from the 5th call, 6th call, 7th call is treated independent. So whatever amount that is invested in a particular sub-position will be sold independently, depending on the take profit percentage you would have set. You can decide to set this one at 2, even this one, you can even set it at 3, or even 1.3, or even 1. So depending on the take profit percentage you have set for this, you just know that this take profit percentage is what is going to be taken of the amount that has been invested on the coin on the 7th call. In the 6th call, just know the 3% is going to be taken from whatever amount that has been invested on the coin in the 6th call. The same applies to the 5th call. So it is independent. That's why you're able still to profit even when you are in the dip, even when the coin is floating. Because when it buys, it establishes a new average price for the 5th call. When it makes the 6th call, it establishes a new average price. If it makes the 7th call, it establishes an independent average price. Remember, an average price is treated as the quantity of the coin bought divided by the amount used for buying that coin, right? So meaning, if the price here, let's say was $2.5, let's say that is the price, then what we're going to do is to get the average price here, we're going to say, what is the quantity? We're going to check, for example, if the first buying amount is 10, we're going to come and multiply 10 by 32. So that is 320. So we are going to then, we are going to see, sorry, so this is the price at which the robot has bought. Now, this is the amount used. But what is the quantity? So we're going to get a quantity, at least a quantity of coin that is going to be bought by the $320. Remember, the price is here. So if one coin costs 2.5, right? If one coin costs $2.5, right? But we are having $320. How much of the quantity of the coin shall we get, right? Sorry, what is this? Okay. My cursor is behaving, okay. Okay. All right. Let's see this. Okay. All right. So we shall find out this quantity. So you just multiply. So this is the quantity we are going to get. So literally, it will be like dividing. What will be this? I just want to give us that picture so that we want to get the quantity of the coin that will be bought by the $320. Now, when we get that quantity, for us to get the average price, we are now going to put the quantity of the coin bought and the amount so that we arrive at the average price. So the average price becomes like the benchmark, right? The benchmark, over which, if the price moves above, we shall be in floating profit. But if the price is still below, we shall be in floating what? Floating loss. I don't know whether I don't know if it makes sense. Is it clear? Is it clear? Yeah. All right. So I just hope it is understood. Every position, every call that the robot makes, for as long as it is from the 5th call onwards, there is an independent average price that is established. Okay, an independent average price that is established. I just want to repeat this one more time so that I give out a clarity on that. Let me just, okay. Now let's assume, I'm going to assume on this, let's take this supposition just for purposes of understanding. We said an average price is equals to quantity and amount, right? Now let's take it for instance that the price of our coin by the time, okay, let me take it like this. I'm going to take it from here. the robot already made the fourth call. Now the price of the coin drops, or the value of the coin drops by 8%. So at this point, I'm going to assume this drop by 8% is going to bring the price of the coin to 2.5. Just giving that example, yeah? Let's assume this is now the price. By the price dropping by 8%, right? For the robot to buy, or when the robot is buying from this position, the price is at 2.8. Now, what is going to happen? The robot is going to look at your first buying amount. Let's assume it was 10. I'll just give you an example. It is 10, right? Now, for the robot to buy, it is going to multiply this 10 by the multiple buy-in ratio, which is 32. So meaning in total, the amount of USDT going to be put on this coin in the fifth call, or in the fifth supposition, is going to be 320, right? Now, that is the amount used. This is our price. But we don't know the quantity of coin that is bought by this amount, right? So to get that, we know that one coin, when it was being bought, it was costing $2.5 at this point, okay? At this point, it was costing $2.5. But how much was put on the coin so far? It is 200 and. So what is the quantity of the coin? If one coin was going for that, about what is the quantity of the coin there? That was brought about by the $350. So allow me just do a little calculation and see. So we're going to have 3 divided by 2.5. So we're going to have the quantity of coin bought by $320 to be, we're going to get 126 coins. Now, what is our average price at this point? Let's establish an average price will be the quantity of the coin, okay, divide by what? Divide by the amount. Now we needed to build up on something which probably I needed us to build up on something which I'm not coming yet. We would build up from okay, let me just give a simple scenario. When the robot makes the first buy, an average price is established, right? Now, let me just repeat this one more time. Clear this. So I don't know whether we are still okay up to this point. That if we begin building up from first call, for example, the other system that an average price is given by the quantity of the coin bought and the price, and the amount used when buying the coin at that supposition. For example, if we're taking an example at this point, that our price of the coin is 2.5. That's the price of the coin bought, right? That's the price. So if so that is the price. So if $2.5, right, gives us one coin, then what will $320 give us in terms of quantity of the coin? That's what I want to find out. 32 divided by 2.5 gives us, so meaning the quantity of coin we're going to get at that position will be 128. This is the quantity of coin, right? Now So we are going to have 20 divided by so we're going to have quantity of coin 128 divided by the amount, which is 320. So what will be our average price? It is bringing 0.4. Oh, it is not coming. It is not coming. Let me just recall. Let me first try to recall that. Maybe we shall do towards the end. Let me just try to go through that and I recall. But definitely, in summary, at least what we know is that at every point, an average price is going to be established independent of the position that is bought. That is what you should know. So that that average price becomes like a benchmark, so that if your current price is here, when the current price of the coin moves above the average price, you will be in profit, floating profit. If it still remains, if the price of the coin still remains below the average price, you will be in floating profit. So each of these happens for every subposition that you see here, all right? That you will be seeing here. It will happen for every subposition for as long as it is from the fifth call downwards. So I'm gonna come up with a formula on that so that I get a better understanding on that. We get a better understanding, yeah? So I believe that part is okay. Okay, let me just, okay. So this question is saying, when do I okay. What if, okay. Okay. Why Bright is asking, Bright is ask, I think, yes. Okay. I think most of the questions are already being answered by Leader Julius, unless there is any probably on audio that we can try to attend to. But Leader Julius is handling most of the questions from the chat. Okay. Okay. Check through. All right, the Elliott wave. Let me just talk about the Elliott wave briefly. We'll talk about the Elliott wave as requested. Now, the Elliott wave, let me just share my screen again. I'm going to talk about the Elliott wave briefly. Let me first get this out. Okay. So we're going to talk briefly about the Elliott wave. The Elliott wave, what you're just seeing here. Let me get this one out first. This one out. Okay. The Elliott wave is what we're going to talk about briefly. Now, the Elliott wave, ladies and gentlemen, the Elliott wave is one of the trading indicators that is mostly used by schools of traders to majorly, one, actually it gives you two information when you're using it. Number one, the Elliott wave helps in, first of all, predicting the direction of the market. yeah, the direction of the trend or where the market is heading to. Then two, it also helps in actually identifying the possible turning points within the market, right? It helps in predicting the possible points within the market where at least the price is going to respect, or there will be a reversal, right? Beside predictable points within the market where the price is most likely to respect and reverse, okay? That is what the Elliott wave does when you're using it to analyze the market. And of course, now when a tool is able to, first of all, predict or identify for you the direction of the trend, and two, it is able to predict the possible points within the market where the price is most likely to reverse, then it gives you a preparatory mind. It gives you an opportunity to calculate and establish your area of value. What do I call an area of value? The possible entry point. If you were in that trade, it also gives you an opportunity to exit in case it gives you a prediction of the possible points where the market is going to change, if it were on the uptrend. So if it was on an uptrend, and then you already see an indication of a downtrend, then what do? It gives you a chance to exit. If you are already in profits, then you should be contented with what you already have and exit the market. But then if you hadn't joined, then you relax and wait. Now, that is the first part that we need to know. Now, the Elliott wave, as you see here, the Elliott wave has two types of waves. The Elliott wave has two types of wave. There is a wave, let me just try to, so it has two types of wave. The first wave is what we call an advancing wave. Advancing waves are waves that moves along or in the direction of the prevailing trend. They move in the direction of the trend, right? If, for example, the market was on an uptrend, you're going to see the general outlook of the market structure will be moving in that direction, an uptrend. So definitely the advancing waves also moves along, right? It moves in the same direction to the direction of the prevailing trend. Then the other type of wave is what we call the declining wave. Now, the declining waves are what I would literally call as the downtrend waves, the waves that tends to show you a market reversal and a movement towards the downtrend, right? They are called the declining wave, and they're generally, the general outlook is in that format, right? So an advancing wave, a complete Elliott wave has both the advancing wave and then the declining wave. Now, what are these advancing waves? We said that advancing waves are those waves that moves along the direction of the prevailing trend. More especially, it is an uptrend, right? Because remember, we identify point of entry down so that we can benefit from an uptrend. Now, these advancing waves are grouped or are actually one. They are 1, 2, 3, 4, and 5. These are what we call advancing waves. Advancing, yeah, meaning the market is moving up. Now, these advancing waves, if you can check on the chart, we have 1, this wave here, this is 1. We have 2, we have 3, we have 4, we have 5. Those are what we call the advancing wave, or what you would literally refer to as the motive waves. Okay. Then the declining waves are wave A, wave B, and wave C. The general outlook is downtrend. All right. Now, these advancing waves here, the advancing wave, the 1, the 2, the 3, the 4, and 5, are just grouped into two types of waves. We have what we call the impulse wave, and then we have what we call the corrective waves. The corrective waves, impulse waves, and then the corrective waves. That is on the advancing waves, what we call the advancing wave, or the waves that moves along the trend of the prevailing trend, or that moves with the direction of the prevailing trend. They're divided into two, the impulse waves and then the corrective waves. Now, what are these impulse waves? Impulse waves are those waves that shows a continuation of an uptrend, right? We have our wave being this, that, this, and that. That is what we call an advancing wave, where we have 1, 2, 3, 4, and 5. This is what we call advancing wave because it shows an advancement in the direction of the market. In fact, an advancement in an uptrend. But then amidst this, in between, on this advancing wave, we have two types of waves. There is wave 1, wave 3, and wave 4, which are called impulse waves. They are the waves that shows a continuation in that kind of movement, in an upward movement. They show a continuation. If you see this, and then you finally again see 3, then you see 5. It is showing a continuation in the movement of the market upward. So they are what we call the impulsive waves. Then we know very well from the rule of thumb that the market will never advance in a linear form. We shall always have the zigzag movement, or what we call the wavy movement, irrespective of the direction of the market, right? And because of that aspect, we are able to see that even on this wave, we're able to see that when the market gains a little momentum and moves upward, if at all this market is to continue upward, some element of a retracement has to happen, right? It has to pull back a little to gain momentum for it to continue moving upward. You get that? Now, that is what we know of the market. Now, because of this kind of movement of the market, it brings in play these other two types of wave, which we are calling wave 2 and wave 4. Wave 2 and wave 4 is what we call the corrective waves. They are the corrective waves. Why corrective waves? Because they are the waves that tends to correct the market. They are the waves that brings about a continuation in the momentum. They help in building momentum of that kind of an uptrend, right? Or they help in building the momentum of that trend which the wave is following. Like in this case, if it is an advancing wave, it helps in building momentum for the way for that upward movement of the impulse waves. Okay. So that is what we call. So they are wave 2 because they tend to correct the market, and then wave 4. They are called the corrective waves. But generally, all of them are called advancing waves because they show an advancement in the trend, in the market, right? Direction. Now, that is what you need to know. Now, also on the corrective waves, the declining wave. The declining wave normally arises from the end of an advancing wave. Like if you already have 1, then we have a 2, which is a pullback, then we advance, then we pull back, and then there's an advancement. When we come to the end of that advancement in the advancing wave, right? We say this is where now the 5th wave has ended. We are going to have a reversal in the market, right? A reversal in the direction of the market, where we are now going to have a wave arising from the 5th wave coming down. But because it is not a linear movement, we shall experience a little bit of an upward movement, or what we call regaining strength for it to continue down. Now, this wave that arises from the 5th wave of the advancing wave is called wave A. This one that tends to move up is called wave B. And then this one that continues down is called wave C. But because in the naming, normally this naming, the labels are put at the end of the wave. That's why we see that we have the A written here, then the B is here, and then the C is at the extreme end. That is what we call a declining wave, because generally you see that the market is going where? Sorry. Okay, we generally see that the market is going where? Is going down. Together. So that is briefly on the types of waves. Now, what would you take as your possible entry points? Now, the entry points. Normally, when you're trading the Elliott wave, the most important thing here is you must enter at the point of exhaustion of the retracement. Like here, this is the end of the the second wave, and then the end of the fourth wave. Because at least you know that the market has already moved up and it has retraced, and the retracement has come to an end. And definitely now it is presenting an opportunity for you to enter. This is an entry opportunity presented, this point. Another entry opportunity is this point, right? Now, you may enter midway, but you cannot enter at the end of an impulse wave, because we said impulse waves are wave 1, wave 3, and wave 5. You cannot enter at the end because the market is going to go against you. Here also, you see the market will go against you. Here, the market will go against you. So you have to time at the end of a corrective wave, which is 2, the end of 2, and the end of 5. Or probably join when at least you have started seeing the journey from a corrective wave, right? At least here you're able to see that the journey is here. There's a journey after the corrective wave has been formed. Now you're seeing a journey in the wave 3 or towards wave 3 or for the formation of wave 3. Also here, after correction happening from the fourth wave, now you're seeing there is a journey upward to form wave 5. So you can enter at least if you're able to see that. Okay. Now that is the bit you need to understand on this. And now let me try to enlarge it. Now, when you have a wave that has been completed like this, it is fully formed without any dots, at least it means now the direction of the market is clear. Like you see here, the direction of the market is clear. Now, what you need to understand also that this the Elliott wave, most of the times does not predict the direction of the trend, right? If the market is ranging. If the market of that coin is ranging, you're not going to see the Elliott wave on any coin. Even if you tap it on other coins, you won't see the direction of, you won't see the Elliott wave appearing. Why? Because it does not predict in a ranging market. Ranging market is a market that is not really very certain of the direction. It is not moving up, neither is it even going down, but it's moving about some 2 points only, right? It's moving about some 2 points, yeah, in that order. So it is not going really up, and neither is it going, neither is it in an uptrend. So that is a ranging market, yeah. So it does not predict in that, but it always helps. It likes predicting in a clear market, a market with a clear direction of movement. Yeah. So that is that. Now, the other instances where you may have a wave. Let me look for a coin, just a coin to look for a coin here. Let me look at T-Fuel. Okay. All right. Good. This is a good one. Good. Now we see this. Now, maybe another thing that you need to understand is that when you just add the Elliott wave, right, the instances you're going to experience some sub waves being formed, like you see here from after the market retracing, you are now seeing again there is a prediction. Just a minute. Okay. All right, here. Now, after the market reversing, resulting into formation of this wave 2, we are now seeing a prediction of wave 3 happening. And you are seeing it is clearly, the direction is very clear. The direction is very, very clear, right? Now, this is the direction of the trend. It is already showing us that this is the buildup of wave 3, right? This is the buildup of wave 3. But normally in every impulse wave, in an advancing wave, we have what we call the sub waves. The sub waves, which also runs in the order of 1, 2, 3, 4, and 5. Those are just sub waves, right? The ones we're seeing in blue, these are the main wave. So sometimes you don't want, you don't want these other subwaves to confuse you. You can simply go and hide it out from the settings. You can just hide it out from the setting, but at least it is here to give you a picture of that. Between every between every impulse wave in an advancing wave, you're going to experience the up and down movement, the up and a correction, the up and a correction, just like you're seeing here. We are seeing this element of, you see here, before we can reach the final end of the buildup of the fifth wave. Yeah, at least we are able to see that we have, this is the end of wave. This is the end of wave what? End of wave 3. This is the beginning point, right? But for us to reach the end of wave 3, in the middle, we are going to have this kind of movement. Are you seeing the up and down movement? You see this point? There's a retracement, and then finally that. Yeah. So we are able to see that. So it is just trying to give us those information that we don't expect, since it is already a wave, we don't expect that the line is just going to move from 2 to 3. In between, we're going to experience those wavy movement as well. All right. So yeah. So, but since your main focus is on the main wave, you can hide out the sub waves, but it doesn't cause anything anyway. This sub wave just helps you to join the trend in the middle, just in case you find when the trend has, the wave has already taken shape, it has already taken off. It allows you to find the possible points of entry, like here. Just gives you those possible points of entry. Yeah, but you can stick to, if you're not good, if you're not cool with using the subwave, you can just hide it out so that it doesn't appear in the chart. And how do you hide it out? You tap on the wave itself, the Elliott wave, and then you come here. You see here, we're having these waves. We have the main wave, and then we have the sub wave. The sub wave is this one, which are in yellow. Remember, it comprises also of the motive wave and the corrective wave. The motive waves are the impulse wave, and then the corrective wave, just like we saw that we have one, which is a motive, then we have a corrective wave, then we have 3, which is motive, then we have a corrective wave. Yeah, so those are the sub waves. It builds up the same way the main wave builds up. So if you don't want to see these sub waves, we just get rid of it by tapping, by just putting this color to be, we can remove the color and we put it as a white color just. Okay, so we can tap on here. We just tap on the motive of the subwave, then we can decide to put it at that, white. Then we also tap on the corrective, we put it white. We can decide to put it white, okay? Or we can decide to put it in a color where it may not be visible. Like I can decide to put it in this, and I also pick, at least black is not visible since my background is black. So I can decide to also keep it black. Oh, yeah. Okay, let me keep it at this color. At least you can make it invisible. Yeah, you may make it invisible just basing on the background of your chart. You can make it invisible so that you only focus on the main waves. Now, when you see why I said that the Elliott wave helps in predicting the possible turning points, you see here, we can see here that it is already giving us an indication of the prediction. This prediction here, it is telling us that if this journey is finally complete, the journey of the formation of wave 3, we are going to have a pullback. We are going to experience a pullback. But this pullback is most likely to either come and stop here, or it may stop here. It has given you 2 possible points where the pullback may happen or may occur, or the market reversal may occur. It may either, the pullback the retracement may come and stop here, then we shall see a buildup of the 5th wave, or if it doesn't reverse from this point, it will come here and reverse from the 2nd point, and then we shall experience a buildup of the wave 5 or wave 5. But why is it giving you this prediction? If we can go back to the auto Fibonacci retracement tool, we said that the auto Fibonacci retracement tool helps it has those fib levels that helps us in predicting or estimating the possible turning points as well, just like the Elliott wave does, right? Now, you may also be amazed that these possible points that has been predicted actually matches the Fib levels on the auto Fibonacci retracement. If we could just introduce and we see if it will match those levels, because we have those levels from which the market reverses on the auto Fibonacci retracement level being, indicator being 38.1. We have 50, right? We have 61.8. Those are the possible points of trend reversal or market reversal on the auto Fibonacci retracement tool. So if we bring this, we are going to realize that this turning point will either be on this, or it will be on the 50, or it will be on the 60. Now, how will you trade it if you realize that that is happening? Remember, the rule is you don't use one indicator as a standalone tool for your analysis. You have to make sure that at least some 2 or 3 indicators are speaking the same language. Now, we have to introduce our auto Fibonacci just to allow us see where this first point predicted is or lies on the auto Fibonacci retracement indicator, and where this second point that has been predicted lies on the auto Fibonacci retracement indicator. So let's try to check it out. Let's introduce our Fib indicator. So I'm gonna where is it? I'll bring my Fib indicator. Let me bring this down. Okay. Let's just try to see. Let's just experiment and see what happens. And we appreciate. All right. Let's try to appreciate. Let's try to appreciate. Now, from this point, based on this, this is the auto Fibonacci retracement indicator. Now, if we base, let's try to increase. Now, with this one here, do you see what is happening here? This is now let's check it out here. Let's check this point. Now here it has predicted that the market reversal will happen within this area or this area. Now this is on the auto Fibonacci retracement tool. Remember this tool, that is it helps in predicting an uptrend and a downtrend, right? Now here we see that if we base on the auto Fibonacci retracement tool, we realize that the market, see, from this point to this point, this is the 0 point, this is the 100%. This was a downtrend previously, and definitely we now experienced an uptrend. Now it is time for the market to correct, right? Now, if you expect the market to correct now, this is what is going to happen. Normally, depending on the momentum of the market can decide to pull back, right, to this respective level, right? Now it is based on how you're going to look at, because now for me, what I'm trying to look at this after the market moving, touching the 0%, this was an uptrend already. There was no room given for a retracement. If you can check it out, there was no room given for a retracement. Sorry. There was no room given for a retracement here, if you can check. So it gives me an implication that if I am to bring my Fib tool and I take that this was an uptrend, let me just try to, let me just a minute. Let me clear this one. So it is telling us at this point that the market is most likely going to come straight to this point before a reversal may happen, right? So you can set your trap around here. You can set your trap around there. So if you set your trap here, this will be your entry point. Then measure this distance downwards to the second predicted point, right? If you get, for example, let's say 2%, that would be the margin call drop for your first call, right? That is what you're going to set as the margin call drop for your first call, right? This one, at least because you want, this will be more of like a stop loss point if you're a forex trader. So you just measure this distance from your entry point to the second predicted point of market reversal, so that in case it takes up from this point and then the market does not reverse, but instead continues down, right? to this very point, you are covered because the robot is going to buy again. And you know the implication of buying again is that it's going to establish an average price, which is nearer to where your price or to the point where the robot bought, so that at least you're able to quickly move up and go above the average price and you will be in profit. You get that? Other than buying from this point, then establishing another average price around there, where this journey will be so long for you to take before you can be in profit. You get that? Okay. I think, yeah. So the last bit, if you see a dotted line here, it is not a full prediction. It is giving you the tentative points, meaning it may reach at this point, or it may not, or it may even exceed. Yeah, because it is not yet there, right? So it just gives you the points of, you know, the predicted points. Okay, I think I've spoken a lot. Leader Julius, anything you want to add? Anything you want to add? At least on the auto Fibonacci, I've told you what you're supposed. I mean, on the Elliott wave, what you're supposed to do. You're not supposed to trade a coin from. You're not supposed to trade a coin. You're not supposed to trade a coin when it is at the peak of the impulse wave or the motive wave. You need to time for when it is at the point of reversal on the corrective wave, which is either here, here, or there. And I already showed you that. Yeah. Okay. Let me check this. Okay. All right. So yes, leaders. Yes, Mr. Who? Yes, Mr. Olu, please, you can unmute yourself and ask a question, please. Thanks, Leader Julius. I think you're really answering these guys on the chat, those who are asking from the chat. Yes, Mr. Olu, you can unmute yourself and ask your question, please.
Hello. Yeah.
Yes, please.
Yeah. My first comment is that I never knew that you can set a take profit for each call. I thought that when you set that take profit, is for the whole of all the calls, for all the calls. I never knew that you can set
No.
different prices, different call. I mean, different percentage for each call.
Yes, from as long as it is from the 5th call onwards, you can set independent take profit percentage.
Okay, where do I do that in the setting? I thought it's just a general something for everything, for all the calls.
Now, yeah, for you to do that, first of all, your robot should have bought more than 4 times, at least from 5 times onward. Then you will go to the distributed and take profit allocation. Distributed and take profit allocation is where you.
Okay, I know that. So okay, that is where I can set it for each.
Yes, exactly.
Okay,
yeah.
okay. Okay. The second question is that, you know, for the declining waves, it ends at C. Yes. Which means that that is the point of oversold. I mean, it has gone down. The market has gone down. Now, since you advise us to buy in the dip, will that not be a point to buy, such that as the coin appreciates, you'll be able to make gains instead of entering the market at other points, maybe points 2 and 4, like you said. Yeah. Let's say now the market has gone really deep down.
Yes.
Is that not the best place to start to key in, and then with the hope that by the time it appreciates, we make a lot of gain? Is that advisable?
Yes. Now, normally what you must also understand is that once the cycle is complete, once you see the once you see wave C, the correct, I mean the declining wave C has already been formed. It means the process is going to repeat itself again. So the next wave you're going to see is again an advancing wave, which is wave 1.
Okay.
Then you again experience a pullback for wave 2, then another advancement, wave 3, like that. So the cycle
it's like the beginning of another cycle.
So actually, the best point, if you find when the coin has already, the Elliott wave has already completed the cycle and it has already formed C. Now you prepare. Make sure you take a keen look at that point of entry. Try to use other indicator and see how the market is. That will be a very good point of entry.
Let me make you laugh a bit. Why I'm experiencing what I'm experiencing now. I thought if I buy when the coin is high, as it's dropping, then I'll be making some gain because the price will continue to drop on each call. So the problem is that because I bought when the coin was high, it's now difficult now for the coin to go back to that original price. That's the problem I had with BTC-ST. But now what I'm getting now is that it should be the reversal. I should go back and buy when it is deep, rather than buying when the price is high there. Because before it can get back to that price, which is responsible for the floating losses I have now, because I bought those coins when they were high. So now for the coin to go back to that original price is difficult. So that's why I say I want to make you laugh a bit.
Now, by the way, even when you're floating, you can always identify entry opportunities and make profit, even when the coin is floating. You can make absolute profit, a lot of it, right?
Yes.
You can make a lot. You can still make profit even when it is in the dip. I tried explaining this last Friday. The concept.
We did it. I've been doing it. Just creating more calls. More calls, and then
identifying an entry opportunity, creating one call, put money there. The robot will sell you in profit as you wait for the build up of that momentum, which will get.
And the more you buy, the price will be reducing.
Absolutely. Yeah.
Okay, sir. Thank you.
So, you're welcome. Yeah. So, thank you. Any other question? Let me see. Whose hand is up? Yes. Ellen, then Gloria. Yes, Ellen Kizito, then Gloria after.
Yes, I wanted to ask about the same thing he has been talking about, but in a different way. Imagine if you didn't put marginal calls in a trade and it is floating. Can you go and add marginal calls?
Absolutely. Now, you can add margin call, right? You can add your margin call limit. Now there are two things that you need to do. So that let me share the screen here and just give you an example. I'm gonna, since this is a laptop, I'm just gonna show you something. I want to. Okay, let me share this screen. I want you to understand this part. Okay, now let's take this as an example. Let's just take this as an example. Okay, now this is T-fuel, right? Now there are information that you need to. Let me just put this here. Okay, now there are information that you need to know, right? Before, there are things that you need to do for you to increase your margin call. Number one, there is this part here. Are you seeing? Sorry, let me use a red color. Are you seeing this part? Ellen, are you seeing this part? The strategy mode. First, if you want to benefit from the sub-cells, there are 3 strategy modes here. The default one is normally wall warehouse mode, right? It is always wall warehouse mode, and it is what is reflected here, as you can see. Now, the wall warehouse mode applies for first call, second call, third call, and the fourth call, right? If the robot finally makes the fifth call and it finds when you had not yet changed your strategy mode from wall warehouse to a sub-bin mode, which can either be sub-bin mode or sub-bin mode real-time settlement. Remember, however much you increase your margin call, you're not going to realize any profit until the market goes up fully and the robot is able to sell everything, right? That's why it is always very important that if you want to benefit from the sub-sell, make sure that you change the strategy mode, right? If you realize that after entering a coin, let's say on one shot, and you realize that, this coin is already going against me, quickly go back on your trade settings, right? And then adjust your margin call. Adjust your margin call limit, increase it, right? After increasing it, come back and adjust on the strategy mode. Change it to a strategy mode that allows for a sub-sell, which in most cases, I do recommend that you can change it to sub-bin mode, real-time settlement, because I believe everyone will at least want to see the profit being reflected. Now, for as long as it is a coin that has not gone so deep, you can benefit from the sub-sell and then just wait for a little while and you will finally be out. But if it is a coin that has gone so deep, then and you want to reduce your floating loss, then you can put it on the sub-bin mode, so that whatever profit that it will be closing, it helps in reducing the average price, right? It helps in reducing average price, but you won't see a reflection of the revenue until finally everything is sold. That is what it means. But if you want to benefit from the sub-sell, much as the coin is floating, you want to be seeing your profit, then you change it to the sub-bin mode real-time settlement. That is what I'm going to advise you do. So when you come here, you see this. You see here the margin call limit. You can increase it now, all right, provided the strategy mode is in the sub-bin mode real-time settlement. If it is in the wall warehouse, please, no, you're not going to benefit from from the sub-cells. Okay, you will not. Did I answer you, Ellen? Is it okay? But you can change this margin call limit to in any time you want to. You can change it. These are features that are adjustable. It is not fixed, but there are some rules governing their adjustment, and that is based mostly on your interest. If you want sub-cells, before you change it, before you adjust on the margin call limit, you needed to have adjusted on your on this one here, the strategy mode, to a strategy mode that will allow for sub-cells, right? But if you make those adjustments and then the robot buys when you've not changed this strategy mode from wall warehouse to the other one, then you just know you're going to wait a little longer, unless you have a lot of capital to benefit from the dollar average costing, the martingale strategy, yeah? Okay, Gloria, then Bukenya, then I think we may call it a day for today. Oh, it is almost approaching 12. So that is some 2 hours, which is not bad. Okay, Gloria.
Hello.
Gloria. Oh yes.
Hello. I want to thank you, leader, for taking your time to explain so many skills to us. There is a question I asked last Friday, but I didn't get the real answer. And it is, I would like to know more about it, about the profit, about the profit in CAD on some coins. The difference between the profit in CAD is in different coins. It amazes that a profit in a certain coin, a very short length can give 8%, but in another coin, a long length gives 1.5%.
Yes.
I would like to know the secret behind it so that I can pick the coins correctly to favor me.
Yeah. Okay. Now, I think what you need to know is that all the coins we trade have different market capitalization volumes. In fact, market cap, the volumes. Now, what happens? What brings about the difference? Okay. Oh, Kara. Hey. So what brings? Just a minute. So what brings about the differences in the movement? Let's give a simple example. Let's now this one will go. Now this one may take us to fundamental analysis, which just a minute. Just a minute. Let me share my screen first. Okay. Now let's give let's check. Let me give an example of EOS, right? EOS. So let me give an example of EOS. Let's try to measure let's pick a price range, and we measure a distance from here. Let's pick from this point predicted, at the point of market reversal that has been predicted. Now, for us to get mom. So for us to get 2%. Okay, 2% is all, this is our 2%, right?
Yes.
So the distance covered probably may be shorter, right? In which even one candle can build up and then gives you that. Now, there are other coins where just a movement, let's say a measurement from this point up to this point, you'll already be in 2%.
Yes, or 5 even.
Yeah. So now, this one here, what brings about this actually to one is the volume of the coin. Now, for example, if I can, sorry?
Meaning how much it has sold, or is
the trading volume
when you
is
talk
what I
about
mean.
Volume, are you talking about how much the coin is selling in the market?
Not how much it is selling, how much is in circulation, in other words, in terms of volume. First of all, that is the total circulation. Then the volume, because we can have an amount which is in circulation, then an amount which is being traded. Remember, not all, when you're trading, right? Remember, this is like a market where we are having the coins in, right? Now, when we buy, we reduce we kind of reduce the amount which is in circulation. It's like we are picking it and we are hiding it in our respective wallet or something. We are stocking it somewhere in some store. We are reducing the availability in the market, right? And when you know that with that principle that when something reduces in value, in quantity from circulation, what happens? What happens? Let's assume we have sugar and then sugar becomes scarce in the market. What happens?
The price increases.
We are creating a scenario where the demand, the demand is increasing. People want the same thing, but it is scarce. Now, what is going to happen? Those who already have, right, when they realize that, okay, I think the price is fair, now they can begin releasing a little by little, a little by little. Yeah? Okay, they may even decide to release everything at once. Now, when they release everything at once, for them, they're already in profit, but they are going to affect the price in the market. Because once again, something goes so much in circulation, what happens?
The demand is
it will be obvious.
Less.
Hey, it is too much now. Hey. Then the price does what? The price drops. Now, when the price drops, that's when you now see a scenario of the market dropping. Now, what happens also is the amount being traded actually helps in determining the percentage range. That's why in most cases, for example, if you see, there are coins that are, I'm looking for BTC. Let me just try to look for BTC. Because there's what we call market capitalization. Market capitalization refers to the price of the coin times the total coin amount in circulation, right? To give you the value of that coin in the market. The value, right? The volume, I mean the total, the summation in terms of value, if everything was supposed to be sold, how much worth it would cost. What? Oh God.
All right. We have lost Coach Musa. I will not pick it up from him, right? I will not pick it up from him. I'll generally just wind up the Zoom. I think his phone has gone off for network. I'll not pick it up from him. But generally, I would encourage everybody to keep on attending our 5 lessons in the week, where we go a little bit more about everything you need to know. And then the most important area is in the practice, because the business is in the practice. So I'll not pick it up from him unless he's able to join again. But I would just want to thank you for attending today's session. And maybe I call upon Leader OBM to close our session this morning. Thank you so much, everyone.
Yeah, thank you, my leader. I just want to say thank you for yesterday's well wishes, for the gift and everything. I thank you very much, everyone. What I just want to say is let us keep attending, the Zoom, because there's no day I attend this Zoom I don't gain something. The day you stop learning, that's the day you stop dying. And make sure also you share with people about Royalq. And just like my caption says, the future, it will always be better. You understand? So day by day, get the knowledge. But I always say again, do not come alone. If you come alone, you won't really enjoy the leverage. We leaders here are enjoying. You understand? It comes to a time you won't always be maybe available. There will be time you'll be distracted, maybe by life's issues. But the business you have built that has given you leverage will always work for you. So please, everything you learn here, always also practice, because practice always brings in perfection. Without practice, you will just always come and not I call those kind of person procrastinators, because there are people in our DM that have been asking, oh, what of Royalq? I want to do it, I will do it. And this is going to 17 months now, and we have seen results of leaders there making a lot of money because they say yes to Royalq and they're always showing up. So please show up, and I pray we have a productive day today. See you in the evening and see you tomorrow. So thank you, everybody. Have a nice day. Thank you.